Hello, everyone. Welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Rational Investors Weekly Show, our Broiler Chicken Show. Back. Welcome back. Welcome back. Actually, where's Mr. Carter? We haven't seen him around in a bit. I did see the kids having fun in crypto land this weekend. Lots of uppy. Tell you, Sjord's fundamental analysis picks for this coming bull market. Gee whiz, they are just doing awesome. This past week or two, we had things like Rune just go absolutely crazy here. Then I noticed I was going through the news articles, getting ready for this broadcast here today, looking at things like this crypto panic, and every bloody article, at least every second one it seems, is AI this, AI that, AI this, AI that. Oh, what a big surprise. Of course, this is, I think, our silver bullet. No, that's not the right word, but our proxy in the AI space, RAND. And that thing keeps, I think it just made a new high here. So lots of uppy in crypto land. Let's see where Sjord's list is settled right now. And this is not an exhaustive list. These are just some of the names that I'm following that he likes. Where is his list? It's on here somewhere. So there we are. Look at that, up another 5.5%. Just broke to a new high. So as long as you know how the old expression goes, right? Show me a new high and I'll show you something. And now off of this trading range, that's a big fat W. So we can actually start thinking about things like fog gun bombs, which means where the hell's the next objective on this thing? Wow, there you go. Up at about $5 or $6 a share. And I noticed that things like the US tech stocks seem to be extremely, well, not extremely, but getting happier again. I wouldn't get in front of this thing. Nothing can stop a train, as they say. That was an old advertisement from way back when. So up and away. I mean, it was interesting how we played connect the dots off of these old trendline peaks. If we probably just go like that high to that high. Oh yeah, you can see. Basically, what is that? That's the end of December, basically into the end of the year. This thing is projecting up in here. You want to see a really good example of that? One of his other names that went crazy recently, I think it was this Hello. Notice we draw, not weird. Maybe it was off a different chart. But we drew really simple. I don't know what I did with it. Well, I can just do it right here really quickly. We just drew simple connect the dots, highs to highs kind of idea. And that basically projected exactly where the market stalled out here. And interesting, look how we kept doing shooting stars above, well, maybe more doji-ish, but above that line, and the market just could not accept above that line. Really cool application of just a really basic concept TA. Just play connect the dots. So I think this guy's probably on pause right now. And Sjord's even kind of saying that, if you actually look at the valuations of this coin, these numbers don't make any sense, but this is crypto, right? So go and ramp the thing up 10x, 100x. The valuations are absolute insanity. somebody in crypto is going to come in and buy here. And unfortunately, most of the public, they don't quite understand these kind of price charts, and seeing, this huge move up here, they don't even really look at this kind of stuff. Melissa, I've told you this before. Actually, I don't know whether I've said it in the public broadcast, but I always say this in our site broadcast. Most of the public, they actually like finish their research at their technical analysis at an image like this. Hey, there's a W. Let's go and buy that. That's got to be a bull. uh, and they don't really sort of put into context where the heck these things have come to or where they're going. So this guy here, if anything, I would almost say this might be an interesting spread trade. Our level 4 instructor, Zach, he'd probably like that. We want to go long RNDR and short hello on the same trade. So you have like a zero net exposure. You're long one and short an equal amount of the other. And let's see what happens over time here. I think probably, 38.2, 50% WD GAN. That's probably realistic here. And since we do have a little bit of an M top working here, that means we can start doing things like chaos theory. So there's 2.618 coming up against 38.2s, 4669s all the way down here, 50%. Actually, there's even some gaps in here that look like they need filling in. Well, actually, no, maybe that's pretty clean. It looks like there's a little bit of a gap right there. Maybe, baby. Yeah, there it is. Oh, hello, right there. So anyway, I wouldn't be surprised if this guy has to work his way back down. But I mean, here's the issue of the market that we're in. I mean, is there any way Brian's going to come in and say, yeah, you could invest in this, you'll do fine. This is a nice cheap asset. Brian's a cheap ass, so this looks like an asset Brian's going to buy. No, I mean, it's just not going to happen. I'm sorry. Even something like the Rend here, I can't justify coming in on the buy side there, understanding that there's the most recent W way down there, and what a coincidence, there's a W there. So basically it's the same levels. So, caveat emptor, just understand the market state that we're in. If anything, our weekly commodity trend survey, this is one reason why I really like this. The platform that we built just gives you, the weekly commodity trend survey just gives you a very honest sort of look at the market. And we want to be super interested in investing in things like fives and maybe even sixes, which are just sort of like all the stars are aligning. And you notice there's one asset here that's a six. There's 1, 2, 3, 4 assets that are still fives. And then look how many are like twos and threes. I mean, hell, of this 30, 1, 2, 3, 4, 5, 6, 7 names are twos. And we even got like very briefly little sort of warnings. Some of these were actually spitting out ones. So what does this mean? A really low score means that the price is substantially above the 50% rule. So like Bitcoin here, for example, you can see the 50% rule of the past 52-week range is actually about $10,000, $12,000 lower than where we are right now. And in this particular case, you can see the fast moving average is above the slow moving average. So the momentum is still pointing up. But because we are so substantially above the 50% rule, there's no way I can come in on the buy side. I just can't do it. It's against my religion. And actually, for considering how much taxes I pay, I wonder if maybe we should start a technical analysis religion. Because if I heard correctly, religious organizations down in the States are technically tax-free entities. That's why guys like MC Hammer went to become a preacher, because what the hell? If you run a religious organization, it's tax-free. Anyway. So, the weekly commodity trend survey is still saying there's a few names that look like they could perform. And there's even one that I think looks pretty darn attractive here. But you can't come in on the buy side on names that look like this. Yeah, TRI is long from down below. In fact, actually, I think see where first. I mean, you can see where the W's are. So I think this is basically where we're long. You can see I've already got sell halves on doubles orders. We're off, and actually, at a $3.5, I could even get another sell half on a double order off here. So probably should even look into that, see what my numbers say. So it's awfully tough for me to come to you guys in the public and say, yeah, go and buy crypto. There's no risk involved here. I mean, oh boy. I think this has got a lot of risk wrapped up in it. But to sort of converse, that Matic, which has been kind of underperforming of late, here you can see the 52-week range, 50% level is right there. So still quite a bit higher than where we are right now. I mean, just absolutely beautiful W, right? If I was going to teach a course on how to run an effective small business of trading, especially trading things like venture capital, I would strongly suggest that you concentrate on assets that are making W's in price at things like 78.6s. I mean, that's the cheap ass Brian's going to have a conniption fit if he sees price action like this. Coming in here now on this Matic, that it's saying that, momentum wise, this thing has turned back up. In fact, actually, if we look at the weekly chart, that's what that commodity trend survey is based off of. So there's the momentum signal that the market has turned back up. And as I had said, 50% levels are sitting way up top here. So right now on this one, I'm actually actively hunting a trend continuation trade. And this is this setup that I teach in our education program, how to trade trend continuations. Ideally, you'd like to see trend line breaks and then market structure on other side of trend lines. This bot setup that I trade, it looks for 3 higher lows. So if I can get any kind of pullback here over the next week or two, and then a turn back up to give me that 3rd higher low, then my entry, I'll take the market structure entry. If this happens to be a top and we pull back and then head back up, I'll be happy to buy if, say, this is the ultimate W. Right? If it does come in there, I'd be happy to buy that. And I'll be playing this move. Basically, this will be my risk window. And that will be my potential reward as a trend continuation trade. So, only time will tell. It's a trader's life. I think probably the best thing you should do is not have an opinion when you trade. Just learn setups that you like to work with, take appropriate risk, and just live with the results. Actually, on Friday, it was kind of funny. We had a day trade that had strapped on a sim for demonstration purposes for the community. I don't know where. Yeah, I guess it was here. Nope, not that one. Was it over here? Yeah, there we are. This is a really, really good example of this concept. This happened to be a range trade. So, and actually, this ICT guy, he's all the rage these days on the YouTube video. So, what the hell? If his setup works, I'm definitely ready, willing, and able to learn. So, this is a really good example. Market was making bullish structure, higher highs and higher lows. There was actually a really nice cup and handle here. At the end of the cup and handle, the market puked out. It broke all this previous bullish structure by establishing lower highs and lower lows and smashing through these lows. Counter trend rally right back into reload zones, 61.8 to 78.6. And if I'm not mistaken, I think this is this guy's concept of his fair value gap. I'm not very attuned to that. What I would just simply say is when I saw this counter trend rally into reload short zones, all I really say, and it's exactly the same thing as the Matic trade, just slightly different, is, all right, I'm going to put the trade on here. You can see where I sold these two fills here. And I had another order up here that never did get filled. So there's my risk on the trade, that box there. And in this particular case, it was kind of funny. We're just blabbing away on the daily brief and the trade's working away, do. I look over and I did like a double take. I was like, that can't be right. And I looked at it, and the damn crude price was down like $3 from where we shorted it. So, this is just such a beautiful analogy of a trader's life. You identify your risk window. In this particular case, like the market just absolutely puked out. And you can see I drew Feigenbaum's. I suppose we probably should have drawn the Feigenbaum off of that range, the highest high. And notice 2.618, that was my profit objective. So Brian rang the register. But if somebody had asked me, in fact, Chris and I were just chit-chatting away. I don't know whether actually, maybe I was just talking to the day trader room guys. But, just sort of like, okay, well, there's a reload short zone there. It did break the previous structure. There is that fair value gap. This was a little Feigenbaum off of these lows. So I do like the idea of just taking a shot up top here, risking to new highs, and let's see what the hell happens. And boom. And this is the way the market loves to work. Like most of the time while this trade was on, I was like, oh yeah, I'm going to get stopped out. I'm going to get stopped out. Well, just live by the sword, die by the sword. It's the way it is. And then all of a sudden, like I said, you turn around and holy crap, look what just happened. So that's sort of the same logic of what I see happening here. Actually, there is another one actually that I'm long. Same sort of thing. These are trend continuation trades. So I'm not going to be saying that, hey, this is low risk, cheap ass. You can see where the cheap ass entries are. Beautiful bottom down here. You're coming in a little bit higher. Like I said, trend continuation. There's actually another one that's spitting up basically the same pattern. And again, this crypto space looking very bullish here right now. This one's awfully expensive. That is a darling in the space. It's fascinating to listen to how bullish the space is now of this name. But hopefully you can see the same logic. I mean, this is where the super value, Brian's a cheap ass, bottom end of the range, 78.6 to 88.6. I mean, this was real. This asset was on sale for quite a long time. So really, really great levels down here. Coming in up here, we're starting to get a bit expensive. Weekly commodity trend surveys, 52-week range. Actually, probably should look for a pullback. This one's fascinating because, you can see where I'm long. You can see where we banged out a double. And you can actually see that the market is trying desperately here to actually put in a bullish bot setup. So, for the purposes of the trading community, again, I don't know what the hell's going to happen. I don't think it's actually in your best interest to have an opinion about what's going to happen in the marketplace, because us as in the public, I mean, we never really know what the sort of the higher ups have planned for us. I mean, that Dan Freeberg guy at FTX, those are the guys that manipulate this shit. We don't even really want to be a part of that kind of conversation. We just roll with the punches kind of idea. But, here's a great example. 1 low, 2 lows, 3 lows. You draw trend lines off of the tops. I mean, maybe you draw it there, and we broke that a while ago. There's beautiful W on the other side of the trend line. Can you get long like this breakout here? I mean, this is exactly the same as that Matic trade. It's just this one already has fired. So the breakout there, 15,333, that's what I've written, and that's where the open order is, just sitting there. Yeah, 15, go buy 100 of these things, so $1,500 trade. You can see where the price objective is up at 23. So then, if this thing works, it'll be worth 2,300. And I'll be willing to risk down to 1280 area. So I'll risk like what? I guess like 300 bucks, somewhere in there, 250 bucks, something like that, to try and clip that. So I've got this working as a demo for the site. And really, this is exactly what the level oneers, this is what you learn in the program. You either are hunting the range trades. I love these range trades, shorting against highs, buying against lows. Or you're hunting trend continuation. Market topped, it consolidated, put in multiple higher lows, and it's starting to work its way up. So I think to all intents and purposes, crypto is still in this phase here. Where I could we're not in the cheap ass, stuff they're just giving it away. Um, and this, if all through last year, I kept saying, get your shit together, get your shit together, get your plan together, get your money together, get what market you're going to trade. Hell, I'm even doing this on the ledger through DeFi. It's a total pain in the butt, but I did do it. And I had to get filled like up top here to actually get my double level off, because doing it through DeFi, you get absolutely raped using the Ethereum blockchain and stuff. And actually, there's one gentleman, Steven, on our Friday show. He's a harmonic whiz. He's sort of captain of our harmonics room. Although I'd say all of them are, equally admirable. Admirable? How does that word go? But these guys at TRI, man, they have so much fun. Igor, Steven, there's Hafed, he's in here. And then, of course, we have a lot of students that also pop in. But, our core guys. Steven's basically our quarterback in this room. And hats off to him. Absolutely think the world of Steven. Anyway, he came on the show on Friday. And he was saying, the hot market to be in. And I've had other people calling in his crew telling me I should be all over this Solana. I never really got too jazzed about it. But nonetheless, I do understand that anybody who did get involved in it here, if you were able to buy it off of the bottoms, I think you got like a 10x on your money. But from what I understand, yeah, pretty nice move up there. So you can see where I was sort of thinking that this thing would act. Ironically enough, our head and shoulders aficionado, David, I tell you, we got so many cool TA experts on the site. Tuesdays is our stock pickers club, secret options formula club, and David O is our he loves head and shoulders patterns and head and shoulders that turn into megaphones. I don't know whether I would call this a head and shoulders or not. It's a bit cockeyed. But anyway, you can see the double bottom here. It's interesting how off of this W here, Foggenbaum's 2.618, midpoints of Foggenbaum's. I'm noticing that this is happening a lot these days. So I wonder if that's supposed to be our reference there. We could probably also do another Foggenbaum off of here, and that probably is 2.618. There we go. So congratulations to everybody who participated in this, was able to take advantage of this trade. If anything, this is actually, again, a good testament to that whole conversation through the end of 2022, 2023, to get your shit together. I mean, everybody can see the big weekly W here. It should be as plain as day. So I don't really have a problem if you say, well, Brian, I'm long from 26 and we just came into my double level. That makes perfect sense. That's actually what should happen here. Anybody who was able to go and pick it up down here in the single digits, well, you're a rock star. Way to go. I think that's probably asking a bit much for most of the public. But seeing this W here, and take a screenshot of this, because I see this all over the market. And there was a little bit of an extra W in there. I mean, hell, you could just go boop, boop, boop. The W actually came in right there, right? But that's what you're here to learn. Then, trend lines 1, 2, 3. So we broke the trend line. Can I please have a W on the other side of trend lines? Well, actually, I think that's what this whole pattern is right there. So anyway, regardless of price action on SOL, Stephen on Friday on the broadcast came in and he said he's having just the funnest time, because a lot of this sort of funny meme coins and all that kind of stuff. They're all being listed on this Solana network. And actually, it's interesting. I was going through the sort of news articles getting ready for the broadcast today because Chris and I put together a nice little newsletter that sort of summarizes what we're seeing in the market. And I was going over to Crypto Panic, and there was one headline in here that I thought was funny. The founder of SOL does not want us to call this an Ethereum killer, which I thought was hilarious. So, I mean, I don't know how the hell all this is going to work out, but I will say, um, from what I understand, doing transactions on the SOL network, and one of the reasons why Stephen was so excited about it is because they're dirt cheap. And there's a lot of names that are having fun. And he was even saying you can do things like limit orders and stuff on the SOL platform. So he was like overly impressed with all of this. Also, too, I've had, I think I said a minute ago, but I've had a lot of people from like Colin. I think he's on the Hero Exchange, but also he works with a few other gentlemen. I did a podcast, and we were actually going to do a year-end podcast. So maybe even watch out for that. I think this coming Wednesday, we plan to do one with the Blockmates people. I think Dan from Blockmates. I think that's their company. I don't want to mispronounce it. But I invited him to come on that Coinergy show. And just, I also asked Colin whether he would like to do a year-end review. Yeah, Blockmates. I think Colin's part of like the Hero Exchange. I don't know whether they're the same company, but I know they do like to work together. So, and of course, they've been like uber bullish of Solana all the way along here. So, congratulations to them on that. But I mean, I suppose you could say, well, Brian, doesn't this look like another one of your sort of bullish bot setups and trend continuation? Maybe. Most important thing if you're going to do this bot, and of course, we teach all this in the education program. If you're going to bot this up, you really want to see at least a 33% correction. So that's good to see that we did come back to there. And then what I would do if this is AB equals CD is put that up there against that key low. We have to use that. If they're going to use that high, then we have to use that low there. And of course, draw out all our bot levels, and odds are this will be backwards. Yep. So we got to go in and flip it around. Oof. All right. So you can see there is the 25 level where we are right now. That would be sort of your entry on this bot setup. We do have W's on other sides of trend lines, man. I got 1 kilo, I got 2 kilos, kind of the same thing as the Matic trades. I probably would like to see another pullback here to give me that third low, and then I might entertain that. But please, people, understand this is not Brian's a cheap ass. This is value investing. This is trend continuation. You're coming in halfway through a move, and you're anticipating that this is nothing more than just a midpoint consolidation. So it's sort of like A to B, and then we consolidate a little bit, and then we go C to D, like so. I could see something like that, but at the same time too, yeah, I may say maybe like 60, 65%, somewhere in there. Odds that this thing holds in here. Maybe pushes up into the move stop to scratch level, move stop to trailing. And if all hell breaks loose and this thing really gets going, interestingly enough, just off of this range alone, going back to March of 2022, you can see that alt ABCD levels are just going to do nothing more than just take us right into this wick. And you might argue, of course, any longtime viewers, where these people are sleeping in Brian's world. It's not too much of a wick here. Probably if we change that to a weekly chart, that's probably a big wick. Where is that? That is this high right here. Well, not much, but nonetheless, I would definitely say, candle body highs for trade location. Interesting how we have 1.618 of that alt ABCD and the 877. So if this thing really gets going in earnest, look left, you can see this is all open air all the way up top here. So keep your eyes peeled. So, I mean, that's kind of how I'm looking at the market right now. And, name after name after name. We're not in value land. If I was a commodities advisor, I would definitely say we are not buying value now. You are sort of, it looks to me like about halfway through these moves. And that means there could be some sort of blow off top. Now, what's going to negate that? And remember, this is a trader's life. You just don't know what the hell's going to happen. If we go through this low here and we can't go up through these highs, then of course, what are we supposed to think if we ever see the market smiling at us? And you all know the answer to that. So, coming full circle back to Sjord, I have been suggesting to our audience and to the public, if I ever do talk to them, that what we really want to do is watch the market leaders. So the fact that Rune here, and you can see I was already watching for this, Rune's been a leader of late, and you notice that Rune did not stop here. So interesting how we had one low, two lows. I never did get my third low to set up the bot, but you can see Rune just blew right through its previous highs. Is that a harmonic? Not really. And maybe if you are going to talk harmonics, I think you have to talk like 1.618 all the way up to 1.91, which would take us up into move stop to scratch and move stop to trailing. So if we do start puking out up top here or rolling over or something, the bot levels themselves would have you sort of adjusting, stop to scratch, stop to trailing kind of idea. But the point here is that, just like I showed you on that other name, the SOL, if these market darlings, and again, remember I showed you the RNDR, it's one of the original ones that led like months and months and months ago. It actually has been in a bull for quite a while. Like its bottom was way over here. So it's been in a bull for quite a while. The fact that these are still pushing to new highs here leads me to believe that we're not done quite yet. Also, too, I just don't think there's a hell of a lot of tax loss selling to be done here, right? Like if you look at usually in November, December, the end of the year, you get a big selling wave because a lot of people want to book capital losses to offset gains that they've seen elsewhere. But where's last November? There it is. Is that last November there? Yeah, it is. Son of a bitch, eh? So, hey, is anybody going to be sitting on a capital loss in this kind of situation? So I don't think you're going to see any capital losses trades, booking capital losses. So there's not going to be a lot of selling associated with that. And of course, if we circle back to corn, there is 1 year ago. Ironically enough, there is the original W. This is the exact same logic. All of these names look the same. Is there going to be anybody that's going to be doing tax loss selling on the corn here into the end of the year? I don't think so. So you don't have that in front of us. And then, what is driving the market here? Clearly the whole sort of Bitcoin as a digital gold, right? So this cycle's inflation hedge. I will say that it is interesting to see that gold itself is starting to perform dramatically here. I was skeptical, definitely skeptical. But if we look at the gold price, you can see that it's starting to move up here in earnest. We're now 2,089 here in the February contract. And you can do fog and bombs and the whole damn thing off of this. I suppose you could argue beautiful inverted head and shoulders working there. So as long as these markets are pointing up in tandem, it looks to me like this is almost like the early 1980s repeating itself. So you can see there's the inverted head and shoulders. So this is to be just the short-term price pattern. As you can see from Bitcoin, we have this AB equals CD. We have 2.618 off of the most recent W. This 25,000 level is a double bottom. These lows were higher than that previous low, so that sets up your Foggenbaums. We do have a bunch of trap bulls in this wick right up here, but there's the original market structure top, that empire there. And really, I might even argue candle body highs for trade location. That's like that SOL chart. Was it SOL or maybe it was Matic? Whichever one I was looking at. Look left. You heard me say that. Well, it's the same logic here. So, this guy's pointing up. And then we go back to that gold chart. You can see the inverted head and shoulders. It's pointing up. And just to give you sort of a historical context of what I think is going to happen here, and the irony of it all, of course, is nobody in the public is talking about this at all. All I hear out of the public is, "Oh, the economy's going to crash next week. It's right around the corner. The economy's going to crash. Economy's going to crash." I can tell you right now, just looking at like a daily chart, if you look at, just look at, the stock market, SPY, right? Just keep it simple. The stock market's just about to break out to a new high here, folks. We're pretty damn. In fact, you could even make the argument, you saw that crazy ass inverted head and shoulders on gold. I mean, this looks like a monstrous inverted head and shoulders there on the stock market. Look at that. So how on earth is the Fed going to lower interest rates in the face of that image right there? If they lower interest rates, this thing's going to take off like a rocket. And I would actually say that, all of the pieces are in place for this thing to rally anyway. So you might just find that the Fed actually says, I can't, or, we can't lower interest rates because, hell, asset prices are basically near all-time highs. That doesn't look. The only reason why the Fed will lower interest rates is if there's a crash in the economy and they've got to sort of help things out. That's not the image of a crash. Sorry, it just isn't. Anyway, the whole point of this was to show you what I actually think is going to happen here, which is scary. If you look back in the early 1980s, which is basically the similar part of the cycle, would be interesting to go back into the early 40s and also see that kind of price action. But, these stocks, they weren't around. Or they might have been, but actually, I think Homestake, I think it was around. But let me finish this out here first. So if we go back to the 1980s, there is what gold did coming out of the 1970s. So here was this whole sort of Paul Volcker war on inflation. And then we had a bit of a consolidation, and then holy crap on a stick. Man, and the interesting thing, of course, is that we're looking for crypto to rally into sort of that end of 2025 to maybe early 2026, like Allen artificially propped up crypto prices there into through this most recent cycle. Like, I actually get the impression, believe it or not, if we look at Bitcoin, that I think, believe it or not, this was supposed to be our cycle peak here. But Allen fucking around with crypto and all that kind of stuff, he kind of screwed around with the market. Remember, he was like on Saturday Night Live with that Dogecoin and all that crap. And then there was one more push into November, December. I don't know. When I do a whole bunch of time studies, I actually did a really cool study on my laptop. Actually, I wonder, although I think I got rid of it. But where did I put it? I think I posted in the lounge. Where are we here? And I don't know. You guys enjoying the rant? I'm just going 100 miles an hour here. Hope you guys are keeping up. I'm on about 10 different themes here. Let's just finish this up first before I get off into that. So you can see what the gold stocks did through the early part of the, well, not early, but sort of in through. Notice this was the 87. I don't know whether any of you were in the market, but I remember I just sort of first got started in the market here. This was the 87 crash. And actually, I got my first job in the stock market in 88 over here. But I mean, that was the big bull market. So could we see gold do something similar through this part of this respective cycle? I actually think so. And then also too, if we think, is it likely that there's going to be another wave of inflation? Oh, by the way, I don't know whether you heard, but China turns out that they have well, actually not China. China is just fucked anyway. But China has a new sickness. And what a surprise! We're coming into presidential election years. So we better make sure to throw everybody in their jail cells and make sure to stab them and then make sure to fill them with a whole bunch of fear. And Uncle Joe will be the only person you can trust in the world. And you better do exactly what you say and vote Democrat come November. Well, whatever. I do find it interesting that there's a whole brand new sickness that they're manufacturing out of China here, maybe to cause this second hyperinflationary wave. I think actually the saddest part about this is that, and you can see we've had this conversation many times. All I have to do is just start typing in the word inflation, and the computer already knows where I want to go. But you can see here in the early 1940s, and this is the actual index itself. What we want to see is the rates. Here we are. So early 1940s, and I think this corresponded really nicely with the first sickness. We had basically no inflation, and what a surprise, the bankster crooks were talking about how, oh yeah, there's just no inflation, right? And then all of a sudden, just out of nowhere, inflation just explodes higher in the beginning part of that decade. Great reset, all that bullshit. And then, oh no, we're serious about inflation. Oh no, we're going to get in control of this. I thought it was fascinating because these people, they're falling into exactly the same traps. They always say if you don't learn from history, you're doomed to repeat it. So what a big surprise. The headlines, and we were passing this around in the lounge today. Tell you, our community is absolutely spot on. But look at what this dickhead here is now saying. Inflation was 0 last month, and our economy grew by more than 5% last quarter. Look at me, Joe Biden. I'm the coolest guy since sliced bread. Whatever, blah, blah, blah. But you can kind of see 1943, you can see, oh, well, we've gotten in front of inflation. 1944, look at that. Hey, look at that. We can actually print a zero print here. So the problem here is that these damn politicians, and I think that a lot of this, would he sell off all of the United States strategic oil reserve to make sure that oil price is heading down? Yeah, these are politicians. They're as crooked as anything. This son of a bitch, he'll steal money from you if he can get away with it. I mean, how do we tell? Time for us to check in with the audience and do a survey. Let's see if you can remember the Beamish Beamish politics. I don't know how that goes. How do we tell if a politician is lying to us? TPG, you already know. You already knew what the question was, eh? You already saw it coming. So everybody, this is where you have to wake up and actually do something. There you go. Thank you, Cheryl. Cheryl's learned. So only one person in the room got a blues singer. I think you're relatively new to the site, so you're going to have to learn all my funny little expressions. Anyway, so the point here is that you can already see that the politicians are trying to take credit for killing inflation here. I might argue that actually this is just it's absolutely cliche how cliche all of this really is. And what's really bothersome, as you can see, coming into the latter part of this decade, and a lot of our site veterans, one gentleman in particular who really loves astrology, we have him come on, talk to us about planets and cycles and stuff like that. And he said repeatedly that the end of this decade is supposed to be just absolutely horrific. It's interesting too, 1949. Look how many negative prints we had here of inflation. It'd be interesting to see whether there was like an official recession in 1949. I know that, of course, there was a manufactured war over there in Asia in 1950. And a lot of people are sort of humming and hawing, okay, when is the United States and China going to go to head here? And basically in 1950, that was, to all intents and purposes, a war with the West and China. So don't kid yourself, it can happen on a heartbeat. So anyway, the point being, I've shown you this chart lots, and there is people like that Lynn Alden, I think that's the person's name, who've kind of just extrapolated this data set to this current market cycle, and they're calling for another hyper inflationary wave here into the end of the decade. So seeing a gold chart look like this through the latter part of the 1980s, I think that you're probably going to see exactly the same thing through the 2020s. And if gold is basically digital, or no, let's send it back up. If Bitcoin is basically your digital gold, does it make sense that Fink is actually wanting to basically get in front of this? And this is probably what your Bitcoin assets are going to do into this cycle, as everybody and their brother in the United States loads up on Bitcoin digital gold this particular cycle through that anticipated inflationary surge there into the latter part of this decade. Makes absolute perfect sense to me. The other thing I wanted to see was Homestake actually has been a gold stock that has been around forever. The only problem is I think it was taken over. Yeah, I don't even see it anymore. Homestake used to be like one of the only companies that was actually around in the 1920s and 30s as a gold stock, but it doesn't even look like it's around anymore. It would be interesting. And does anybody watching, if you just happen to know a gold company that was around in the 1930s, 1940s, it would be interesting to see if there's Homestake, gold mine history. Yeah, so these guys, they've been around a long, long time. 18. Oh, so did they get taken out in 2000? Is that what happened? Supposed to show how old I am. I thought this was yesterday. Homestake mine on January 7th, 1923. So, yeah, might be interesting to pull up some gold stocks from the 1940s and just see how they acted, whether they did this kind of behavior. I have a feeling they did, but I can't attest to that just right off the top of my head. Anyway, so the inflationary proxies look like they're all kicking in, and Jesus, that gold looks strong now, eh? It's a little bit sad. If anything, what we should do is check in on the gold silver ratio and just ask, what does this say about the economy going forward? Here is the gold silver ratio. When this is heading up, it's actually heading in gold's favor, and that's actually bad for the economy. And then if it's heading down, or maybe it's the other way around. I can't remember. Gold, no, it should be the other way around. So actually, interestingly enough, I think there's like a wedge going on here. I don't think it takes rocket scientists to figure that out. So, we just pull that back. It'd actually be interesting to see. It might even be off of that high there, eh? Yeah, looks pretty close. Anyway, you can kind of see there is a coil We broke out to the upside. We put in a tight little M here. This would actually, a breakout to the upside here like this would be, that would be gold bullish. And that would be sort of like, oh boy, go bury your head in the sand. The economy's not doing well. The fact that we just put in that M there and silver came roaring back. And so as a result, this ratio came back down to earth. Keep in mind, for the longest time, I mean, the longest time, this thing sat at like 50 to 1, like literally almost my entire career. I think what we're saying here is, as the economy, and I guess this kind of makes sense, right? So as the economy is or as this ratio is moving down, and after this M top, you can see that the economy was booming, right? And this is deflationary. People use silver in industrial products and hell, even in clothing and stuff nowadays. When this is moving up, that's uh-oh, the economy's in trouble, and people are buying gold because they want to bury their head in the sand. And of course, there's 2008 financial crisis, dilute the shit out of the money supply, and people just went and bought gold and wait for the economy to actually turn back around. Then of course we had the Great Sickness, massive money printing. The economy went boom. So this was economic collapse. This is economic boom. And then you can kind of see, well, this is sort of the end of the boom times. So on this inverted head and shoulders, that's where, of course, the Fed started to raise interest rates in earnest. And then we've just been sitting here going back and forth, with this getting tighter and tighter and tighter. And if the economy is as strong as it is, we should M out here, and this should help the silver story immensely. If this thing, however, holds these lows and starts turning back up, then it means your economy is in trouble. So just the fact that we just went and put in this M right here actually is a vote of confidence for the economy. People are buying silver to actually use it in industrial purposes. So that's an interesting conundrum. I would simply say that this image right here just simply says that the market is kind of just, it doesn't really know one way or the other. I think, if this ratio can get below 75, that will be a huge tell that the next sort of big cyclic move higher in the economy. We teach in the level 1 program that we're now headed out of the fear cycle, and we're now in a greed cycle, and the economy should grow, and the demand for paper assets should grow. That is this conversation. So when the economy is growing, here's 1980 all the way to 2000. So this is the greed cycle for the baby boomers. Economy's growing. Their baby boomers enter the workforce. They, huge population. As they get older, they get raises, which means they make more money, which means that they want to invest more, which means they buy more stocks, right? This is the Dow on the numerator. As it goes up and up and up, people are buying more and more stock. So what we should see here, if this really is a transition into this new economy, is we should, and you can see that this was sort of the absolute worst of it. There's your housing crisis. There's Obama sort of putting a floor into the market. And this is sort of starting out our new sort of cycle here. The cycle officially was supposed to start right in this window here. It's interesting how we've gone up, we've come back down, we've gone up, down, up, down. We're just sort of sitting here waiting for somebody to give us the green light. So if you see that the stocks go booming up through the top here, which would probably be on the event that the Fed says, yep, we've gotten ahead of inflation. Don't have to worry too much about that. As soon as you see that, then that's probably also the key that that silver market resolves its consolidation as well. So I think we're still sort of in that, I don't know, we don't have enough clear data just yet. And if anything, this kind of concerns me a little bit because, if we actually look at our inflation deflation gauge, and this thing is absolutely the best tool to use to help you understand inflation in the market or not. This is the relationship between the inflation protected government bonds and the non-inflation government protected bonds. If there is an inflation problem, then people will pay up for that inflation protection. And that means this thing heading up, right? Because it's in the numerator. If, however, there's no perception of inflation, or maybe there's deflation, which of course was all through here, right? Here is your great financial crisis. And really, the economy should have collapsed here. But the silly banksters, of course, said, screw the standard of living of the average American citizen. Print all the money you need to make sure that prices don't fall. But make no mistake about it, we were in a massive deflationary spiral there. So we had our Jupiter Saturn cross, great reset, money cycle, all that kind of stuff. Literally, as soon as that happens, boom, back into inflation we go. Like literally on a dime, we pivoted back into the inflationary world. I might make the argument that probably the natural thing to happen here is we have to do a 50% retracement of whatever this big move was. The only problem here is I don't know whether this is actually done yet or not. Brian, he wants it to mark sort of, I mean, you can see, look how beautiful this W was here. I mean, that is as W-y as W's get, right? I mean, we just pull that out there. That's a nice W. Hello. Right? In fact, actually, that even came from all the way up there. So you could make the argument that, the W looked like that, right? Really nice looking W. So what do we got here in the short term? We have a move straight up into some really interesting technical objectives, 2.618, AB equals CD levels. I think this is an old historic key high. I like the idea that this actually is probably carving out a massive inverted head and shoulders. Right. It's probably, and you can see, I've had this conversation with people here recently. So I wouldn't be surprised if we go through that period. Now it'll be the period where the talking heads and all that say, well, we've gotten in front of the inflation problem. And you probably see the gold silver ratio resolve in earnest towards the silver. Remember the 1950s, the hallmark of the 1950s was, well, this is a very low inflationary environment. The fact that the previous decade was hyperinflationary and we never saw the sort of economic levels that we saw prior to that. They don't talk about that. All they talk about is, well, the rate of change for the 1950s wasn't as bad as the 1940s. And I've talked to you guys about this before too. I mean, I'm all over the map here today, but I hope you guys are enjoying the rant. Geez, I was having fun just blabbing away here. Um, but I've told you guys about these money cycles. But actually, what I wanted to show you was the money supply versus the housing market. I don't know where the hell I have that. Here it is. So what I think happens here is kind of like what we said there. This unfortunately, that's just unsustainable. And Chair Powell has been saying in every one of his conferences, the economy cannot work if you have this kind of inflation. And indeed, things really started to fall apart there. All the year over year comparisons and stuff, it was just an absolute shit show. And interest rates, of course, rocketing higher, bond prices collapsing. technically the US government is basically bankrupt. It just lives on borrowed money, this whole Western society. So what I think is going to happen here is, the decade of the 2030s is going to be not so much, and we're in an interesting environment now where this is actually coming off. But really, I think what they need to have happen is you got to come back to this trend line growth here, which means that, I don't know whether it's now, we might, you notice that the housing market, house prices are right back up basically at all-time highs. A lot of people on the West Coast are telling me that, things like California real estate, it's basically at all-time highs. Buddy over there in Hawaii saying it's still a fucking orgy over there. Oprah is still trying to steal everybody's houses and lighting bushfires here and there. Actually, she would never do that. She'll get Dwayne to do the dirty work, right? Anyway, but I think the bottom line here is we can't continue on this kind of path. The question here is, though, can they get this to actually come back down to trend line growth? And then you see something like this, where we're just basically going to keep marching along this path that we've been on basically since, and you can see that we've basically been on this path really since the 1990s, following the end of the Cold War. So I guess the point I'm trying to make here is, if we do see that sort of calming down in the situation for inflation and this kind of thing, it's not really like we're going to go back to the 1990s or even the 2000s kind of world. It just means that the rate of change of this is going to kind of flatline. I wouldn't be surprised if it might even look something like that, where we're just bobbing and weaving in here. But, and this is where Biden goes, well, inflation is zero. Well, the rate of change year over year, yeah, but we're never going back to this world. We're just this world, these prices, Klaus and his great reset and all that bullshit. I don't think that they can even allow this to go back. And I do find it fascinating. Like I said, how on earth can the Fed lower interest rates with housing prices making new highs here? That's impossible. There's no way they can do that. So anyway, I don't know whether that helps sort of the picture. I guess what I'm thinking here is, I do like the idea that there needs to be a economic pullback and inflation needs to come under control here. How this plays out, I don't think that they're going to allow this to break here into the US election. Like, I wouldn't be surprised. Notice, this is a fairly long window. That's 4 years right here, right? From there to there. That's like a 4-year period. So like just 1 year might be just something like that. So you might find that maybe we zip down here, then we come back up here. But for me to actually believe that this economy has turned the corner, we have to see this thing actually M out and structurally start to fail here. And we just don't have that yet. We have a V up and a V down. Now, Biden is coming out, like I said, and saying inflation is at zero. Well, okay, yeah, maybe we can print like month over month inflation is down. But is he going to talk to any of us about the fact that he was the leader of the entire Western world through that? Is he going to admit to the fact that we lived in a very deflationary, very stable price world prior to him becoming president of the United States of America? And we do not live in that world anymore. He has completely destroyed all of this sort of low price pressure world that we lived in, which actually justified things like MMT, sort of nonsense economic policy. You're not going to hear him say that, but it's it's a lie for him to come out and say, look at that, we're killing inflation, and inflation is we've won, we're the best, and look at what great job we've done. If he won't acknowledge what really, because keep in mind, he started out in his socialist dream basically right here. And you can even see that the market itself said, holy shit, socialists are coming in droves. They basically took over the US Congress through that, phony baloney election that we had there. And the market itself went, oh shit. And, there's the end results. There you go. All right. Thanks, Andre. Smalley? What was that guy's name? Stuart. I want to say Stuart Smalley, but I don't know whether that's the right name or not. So, there's your big win on inflation right now. And the problem with this is, when are we actually supposed to expect this thing to be heading down in earnest, right? I think what we need to see is we need to see some sort of structural top, kind of like this, right? When you see that, then all right. And in that kind of environment, the market can do very, very well. Interesting how, Bitcoin bull market, we had a big rally there. Actually, no, I beg your pardon. 17, I think, was the top, eh? So 18 was our top. So we came into here. I don't know whether we can use the inflation deflation guide here. It is interesting how did Bitcoin anticipate this deflationary spiral here? Maybe, with it coming off in price. So I would imagine if you're a Bitcoin bull, you probably want to continue to see this work its way higher as that sort of inflation fire continues to get stoked. And in a weird sort of way, I could very easily see back and forth here for the next year or two kind of idea. And then on the break that indeed actually the economy is rolling over and we're heading into deflation. Maybe it's on a new sickness. They're going to shut the whole economy down, all that kind of bullshit again. Who knows? Might be nuclear war. I mean, I wouldn't get into the business of predicting the future. I was there. Not a single fucking fortune teller around the world predicted the collapse of the Soviet Union. Now, you would think that if you could predict the future, they even did studies about this. I used to teach this in the level 1 course. Not a single fucking fortune teller around the world predicted the collapse of the Soviet Union. So it just goes to show nobody can predict the future. So who knows what the hell is going to cause this? But I definitely think that, at some point we are going to have to go through this event here. But this probably happens near the end of this cycle when we actually start seeing this stuff, and that's probably near the latter part of the end of the decade. So if anything, we should enjoy a pretty friendly window here. You got the fucking politicians coming out saying, yeah, we've won the war on inflation and all that kind of bullshit. We've got an election year here. There's no way they're going to allow the economy to break through the election year. I've kind of talked to you guys about this before, so I don't think this should be really new, but if you're kind of thinking about what the Fed and interest rates are likely to do, where is that? This might be it. I think that if we just follow what the Fed funds, what they have done in the past, this generally works on a 4-year cycle. So here was a massive interest rate increasing cycle here into 2006. Of course, housing markets started to waffle. Then and you notice that interest rates actually went sideways from July 06 all the way to August 07. So a full year of sideways. I think you're going to see the same sort of thing here. So I don't think it's necessarily that the Fed's going to lower rates. I think it's more like, well, the economy is doing pretty good. There's no reason for us to, the year over year comparison kind of ideas on inflation numbers are relatively benign, but I don't think that they can lower interest rates. So you're probably going to get sort of this sideways type market. They'll just keep going, keep going. Stock market will keep working its way higher. Bitcoin, of course, we're all expecting 4-year cycles. Bitcoin should moon here. In fact, what I wanted to show you earlier, but I actually did the chart on my laptop. So I have to figure out how I can show you this on this computer. I was posting it, I think, through the weekend. Really interesting comparison of cycles for the 15 cycle and then the 2021 cycle. It's impossible to predict the future, right? I mean, just don't get into the habit of it. But this is a really interesting sort of comparison. So this was the first correction that I went through in Bitcoin prices. Notice that the correction from peak to trough was 59 bars. This was our most recent, the previous cycle from the 18 peak to the 19 trough. Notice that was 50, what does that say, 53 bars? I think that's what that says, yeah. And then notice this one here, from this cycle peak to this trough, somewhere in that area, 50 to 60 bars, something like that. So very similar. One thing I did notice, and I didn't really clue into this, but until recently, but here's our halving events. So to sort of mark the new cycle. So this is the first one where it was just like a V bottom straight up. Notice we hit 61.8 and then we had to back off. And then usually what happens is about a month or so prior to the halving, there's a bit of a pullback in price. Last cycle, it was so violent. It was like straight down, straight up. I mean, look at the rally. It was just straight up here. And I remember when this happened, man, there was one guy on the site, he was just absolutely freaking out about how it was just, and that's the problem with Bitcoin is when it does start going parabolic like this, man, the emotions are just over the top. So, I mean, does this cycle look like this where actually we don't tag that 61.8 until just before the halving event? Maybe. There is the halving event coming up here. Oh, excuse me, hiccup. I don't think we're like this cycle because you can see there was the bottom and then we just went boom straight up here. This one's taken quite a while. We ran into a bit of traffic this summer. If this was like that cycle, we would have just gone straight up through that summer, right up into Mountain Man. But we didn't do that. We consolidated. And, as I pointed out on the weekly charts, which I tweeted out here, it kind of looks like this consolidation in itself has actually set up some upside objectives. So there's 2.618 at the 50% level of the entire range. And there is 61.8 up against that high, that Empire peak high. I think that before this halving event, and it's just my opinion, doesn't really mean much, but I think that we've got to go up and tag that 61.8 and take out that high there, or at least challenge it in earnest before this is done. So that's sort of what I'm thinking right now. I wouldn't be surprised if we come into a bit of a resistance point here, this fog and bomb sort of midpoint. I've talked to you guys on the weekly chart. There's a whole bunch of trapped bulls right in this wick right here. And you know that if as soon as we get into this level, whoever it was that shorted this, and that's probably the guy who put the original top in here, but also anybody who bought that rally there, the attempted rally that is, they're trapped. They're sleeping on the couch. And of course, they would desperately like to get off the couch. And my hunch is you're probably going to see a bunch of selling come in there. And you might even find that, we go sort of like up, then back down, and then up to take out this high. So we've got to see this kind of volatility in price. So if we take our little tool here and we just juxtapose it over that level, then that produces some volatility, something along those lines. So and I don't think I can flip this backwards. So I'll just see if I can just eyeball this. We'll go like that. So that's sort of the exact opposite of that. So I'm kind of thinking that we rally up into these 2.618s, into this wick, into the original Empire top. Then we have to have a bit of a pullback here. From what I understand, I mean, well, first and foremost, we are coming into a historical window where you usually get a bit of a pullback in prices the first week following that big, Black Friday, Cyber Monday sales window and all that kind of stuff. This is the irrational exuberance speech that Mr. Greenspan made famous, 20 some odd years ago. So we're coming into that window. Usually the market has a bit of a hangover following this. And then also we're sort of getting ready for what does this Christmas season look like. And I'll tell you, I mean, I don't think that retail sales are going to be too stunning here. I don't think the economy is rip-roaring strong from the consumer side. In fact, I think the consumer is a bit weak. But ironically enough, that actually probably helps the stock market. You don't want the economy too hot. You don't want it too cold. So anyway, we'll see over the next week or two what those Black Friday sales numbers were like. And then also, too, sort of getting ready for the upcoming Christmas season. Also, too, Greenspan or Powell himself specifically said on Friday, and that's sort of speaking to our newsletter, that, don't expect the interest rates to go down anytime soon. And I don't think that they will. It's a little bothersome that politicians are coming out and already doing like victory laps. But with the stock market as strong as it is, you can see we had that pivot on the stock market, and the breadth indicator just worked perfectly to grab that on the ES. Breadth indicator on crypto is a little choppy, but oh boy, does that look like a W that's starting to come in on all this shit? And if that's the case, we're not really overbought anymore. We're kind of midline with regard to the slow index. I mean, geez, this thing could go bury itself in the overbought camp again. And Brian will get all stressed out about it being overbought. But right now, if anything, I was kind of pleased to see because the indicator was getting a little chopped up through all this. But our most recent signal came in here. And so it did catch that chunk of the move there. So I'm happy to see that. Again, sort of that, maybe we're due for a bit of some sort of local top here. I don't see how we can't hit this 2.618 here in the short term. I would be very, very surprised if any kind of peak came in here in the short term here. I wouldn't be surprised if we get back and forth here. Don't get me wrong. You can kind of see that the volume's kind of waning. Momentum looks a little troublesome, and Willie stupidly overbought. But this is a 4-hour chart, right? You can see what the volatility of this market's been like. I mean, it is pretty wild. These are huge swings, 8-9% moves in the market. I think also, too, you can kind of see how we're kind of, I don't know whether you can see this, we're kind of flatlining and we're starting to go parabolic. I don't know whether you can see that. So it almost looks like, and this probably isn't the best chart to see, probably off of this chart, you'll see it. Yeah, so you can see this has been an upward sloping wedge, and usually they say ascending wedges resolve bearishly. But if we go and just plow through the top here, and I don't see anything off the daily charts, like this volume bar here, right here, actually broke some volume impetus signals there. So there's nothing really toppy there yet. And the daily momentum, I mean, that looks like W's. There's no M's there. So I don't think you really want to get in front of this. Yes, Willie is stupid, but sometimes Willie can sit stupid for quite a while. And on that 4-hour chart, like you saw, we are stupid as well. Also, too, if we're thinking M's and W's on RSI studies, I see W's. I see a W here. I see a W here. And I even warned, I remember a week or two ago, anybody that's been watching these videos for a while, we painted this purple W or M, beg your pardon, the third M, and that's a trap, right? So if anything, seeing the Bitcoin price move its way higher here, that actually aligns with that kind of thinking that this third M was a trap. And as soon as you start seeing W's, then that's starting to tell you that the bull's starting to come back. We got two W's working here now. It's not a good location. This is a horrible location. So I think we are moving up here. It's just, it's not going to be like an absolute incredible buy signal. I think this is kind of like we're within shooting distance of some sort of top up here. Now, I mean, as you can see, usually dojis are marked sort of midpoints. They can, well, not, they can either mark a midpoint or a pivot peak. So you can see like dojis up here kind of mark that peak. And you can kind of see here to a certain degree, man, that's kind of peaky. It's not really the best example. Sometimes dojis can mark the midpoints of moves. So it's like here to here, we've got dojis, and then here to here. And actually, there's a good example of a doji that was a cycle peak. But I guess what I'm trying to say here is usually dojis are a consolidation signal, and it makes sense. They're called like indecision candles. And they can either mark a midpoint pivot or a cycle pivot peak. And I get the feeling that that's a midpoint pivot. So it's like A to B, doji, and then C to D, which would be just a replication of this range on top of the doji. So take us up into here to 61.8, mountain man level, all that kind of talk. Of course, you know, very rarely does it ever move in a straight line. But looking for a moonshot up top here, I don't think that that's unrealistic. Is this a good place to go and buy Bitcoins and invest in Bitcoins? Absolutely not. But, you know, Brian does not want you to be taking trades at the top end of ranges. I hate that kind of talk. Now, if, and this is, I guess, going back to the lower time frames, off the higher time frames, nothing really for me to do here. But off the lower time frames, I suppose you could see that if we go down, say maybe probably that 4-hour chart will work. So, you know, is this, you can see I was last in a bullish bot right here. I hopped off because I just didn't, feeling vertigo, to be honest with you. I don't really have enough to really work with here. I mean, maybe if I got a nice consolidation and 3 higher lows, it might set up a trend continuation. I think probably the best that I can possibly say here is this looks like it was a range breakout. So that means we want to do sort of like bottom end of the range, top end of the range. If this is a range, then we think things like parking garages, which means we want to think extensions, which means that we want to do something like that. So 1.618, that was these highs here, 2.0. So this would be sort of a very natural range extension right in there. So we are coming into that level, and of course, $40,000. That's going to be a really big psychological level. Interesting how we have a 1.272 at that 40,200 as well. So I guess that's what I would be thinking right now. And I suppose you could have said, well, you know, I'm gonna, you know, maybe this is like a cup and handle. So maybe something along these lines. I mean, this isn't really that sciencey. Something like that. You can kind of see it. So could you justify like buying the breakout here and then risking to a break of the handle there? That's your risk window. And then your upside is that 200%. That's not a terrible risk reward. It's just not a setup I'm really too jazzed about. I'm way too busy trading futures contracts to get too wrapped up in this. Having said that, you know, my general message on the Twitter and on the newsletter was just that, you know, this thing is moving up until it isn't. And as I showed you on this chart here, we're breaking the new high, show me a new high and I'll show you a buy and all that kind of talk. It'd be interesting to look at the futures contracts to see if they're breaking the new highs. But the bottom line here is I would not get in front of that and I would just let this thing play out. And no, we're nowhere near the bottom. There was the bottom. And really, you could argue that this is basically twice this price. So had you bought the bottom down in here, you should be trying to sell halves on doubles up top here and establishing the risk-free trades, putting the risk-free tokens on some sort of USB device or ledger or something, and then going and burying them in the backyard and forgetting about that risk-free trade. That's what the smart trade is. And this is exactly the same conversation as all of these altcoins. Buy the bottom, sell halves on doubles, and the list goes on and on and on. And I might actually make the argument that there's probably more money to be made on these kind of names than there is on Bitcoin. And of course, all the Bitcoin maxis all start puking out and getting all upset. But the proof of the pudding's in the eating. And last week's winner, I mean, I don't know. Would any of you have liked to have been in this trade? Chris, were you in this trade?
Yes, I was. Happily took a double on Friday evening.
So this is why we play the altcoin space. Every single week over the past month or two, we've been posting a brand new chart that keeps popping off here. This is why we play this space. And what I found fascinating, of course, was about 3 or 4 months ago, you had all the Bitcoin maxis come out and even saying publicly things like, why would you ever play the altcoins? Why, Bitcoin's the only thing. I mean, no offense, but has Bitcoin done anything like this lately? I don't think so. So you want to know why we play shitcoins? Proof of the pudding's in the eating. And what do you think, Chris? Did that go down pretty smooth?
It did.
Was that agreeable to you?
I'm in a free position. It went up a couple 100%. I'm gonna sit tight on this one, but yeah, it worked out pretty well.
That's exactly why we do what we do, folks. Whether it be, and this is the best part about TRI, is we're just chock full of guys that are just so smart in this space. I even posted it in the lounge this morning. I can't even keep up with these guys. They're so freaking smart. But here's another one. One of our OGs. He encouraged me to get in on this. I saw the W. I would have preferred to be along here, but I saw this here and I was like, you know what? Just go grab some. And I even said, if you can, grab me some more down at the bottom if it does come down. But it doesn't look like that thing's coming back down to earth anytime soon. So get ready. There's another one that's just about to go. And I know we've been talking on this site a lot about this one. So, thank you, Zoog. You are awesome. Hugs and kisses. There's that crazy air. I mean, Jesus, look at these moves. They're just insane. Hell, I'm even making money in stable coins by the W's there. I mean, look at this one. This is crazy. But a profit is a profit is a profit. Look at that son of a bitch. We call this the gold-plated vodka trade. So we're up like, I don't know, that's about 300 or 400%. I mean, has Bitcoin done this in the past few weeks? I don't think so. So you want to know why we play shitcoins? Well, it's because of charts like this. But the point is, you had to have your act together. You had to have all your plans in place. You had to know what it was that was going to get you to act. You had to do your fundamental analysis. I mean, I don't know the story from Adam on this, but Chris, he really likes this real world assets on the blockchain. He really likes this story, and what the hell, he's getting paid. So congratulations, Chris. Nicely done. Okay, so there's your summary of what the hell I see going on in the market. Sure hope you enjoyed that. Chris told me that there are questions in the document, or there are no questions. I can't remember what
We
you
have
said.
one question in the
One
document last
question.
time I
All right, well,
checked.
that's not that big of a deal. All right, we got about a half an hour. We'll swing around and look at the daily brief room, see if there's anything there. And if not, then we'll let you on your way. Okay, so it's not that one. Where is the AMA document? There. Oh, that's not it. Whoop. I hear a bleep. That usually means, there it is. Thank you, Mr. Bleeper. All right. All right. So, yeah, really, really small. Brian, could you please give me your analysis between the DXY price action and the COT chart? Ooh, that's an interesting question, especially from a level oneer. Oh, actually, vet, maybe that means that's a site veteran. We do commitments to traders reports for the level 2 program. Actually, Marat, he's such a great instructor. So super, super fortunate to have Marat part of the team. Let's see. So I actually have I think I have like a pre-formatted layout. COT overview. All right, let's see what we got here. Open new tab. All right. That's interesting. Actually, that's an interesting conversation there. Who can tell me if you see the commercials going long, what direction should you expect the market to head? I'm gonna just be curious to see whether you guys even know the answer to that. That's right, TPG. Yeah. So you can see that they were basically right the whole way along here. You can see where the reset happened and where the trend really started. We're at an extreme now. So this is the bond market. So if anything, we probably could use a check of this, but I wouldn't expect a check to actually start in earnest until we actually start seeing some sort of M, and then from the large specs, some sort of W, because the large specs facilitate the trade for the commercials. So nice dead cat bounce here, but I don't think this is the start of a new trend. And I wouldn't be surprised, like I said, Chair Powell came out on Friday and said, whoa, 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 slow down, slow down, slow down. I don't think that the interest rate market has actually turned just yet, but it might be the beginnings of it. So anyway, but that's not what was asked. What was asked was the US dollar. So can't do the index. We'll have to do the futures. So US dollar futures, DX, and then one exclamation mark is sort of the spot contract. So we'll go off of that and we'll see what it has to tell us. All right, actually, this is interesting. So based on what we see out of the commercials, if we see that the commercials are short, and we should expect the US dollar to go up. So it's interesting how that did happen through here. So there, they were correct. Looks like they were off base here. So US dollar was coming down. And yet the commercials were reducing their positions. I think that actually the commercials here were expecting the US dollar to continue going up. That's kind of interesting. It sure looks to me like we just had a reset function here. So if that's the case, the reset function here, that has the commercials now bullish, which means that just like we said about interest rates, theoretically, and you can see that that double bottom kicked in right, let's see where that is, right there. Whoop, missed it. There. So that's right there. As of this point, they actually think that the US dollar is actually going to go down. And the large institutions, oh, have I got this backwards? I beg your pardon. Oh my goodness. Oh, what a knucklehead. Let's start that over. Once upon a time in a land far, far away. Oh my goodness. Can't believe how I got that all wrong. Let's start that over again. You know what? In fact, actually, you know what? Just to be damn safe, let's go. And what color is this? Is this teal? Is that what you call that? Equals commercials. Commercials, which equals opposite of trend. Just try and remember that. And if anything, probably a good idea that I do this so we stay true here and not bullshit you guys. And greens, this is the large specs. They facilitate trade equals with trend. All right, and let's do that green. All right, so let's start this again. So, and actually this makes more sense. So we have the commercials started to go long right here. And you can see the large specs facilitated the trade for the commercials. They did the trade for them, right? And they went short here. So this point here was this is an example of the market at an extreme. So extremely short, extremely long, and they need to sort of clean up their books. So as of this point, the large specs are actually thinking, they're facilitating the trade. So commercials are the smart money. They are thinking that the US dollar is going to go down here as this goes up. It looks like they were a bit early, right? And the US dollar actually started to go down in earnest here. And probably that was on this event here because it looks like that's kind of like an inverted head and shoulders. So actually, it looks to me like maybe that signal was right there. So like that. Right there. And then same thing for the large specs. I think that this was head and shoulders top. And the breakdown through that head and shoulders, the structural levels right there. And so at that point, the bear market in the US dollar is full on. I think you could make the argument that they started to unwind their previous stance, previous trend here, but the head and shoulders sort of like validated it. And sure enough, strongly trending down, strongly trending up. Commercials usually do the exact opposite. So they want to get longer as they see the market heading down. And as I had said there earlier, this was a checking of a market that had moved to an extreme. So what you should expect is they should come back and kiss at the zero line, and then we find out a new trend. Okay, now where do these guys think the market's going to go? So the bear market stance being heavily short. It's confusing. Sorry. The bull market stance, commercials being heavily short, that has played itself out. That is unwound. And now we're sitting here and the market's kind of like, okay, we've come back to the zero line. What's the new trend going to be? The fact that this is so well defined here, it's actually a little bit shocking, to be honest with you. But I think you could make the argument that commercials, when the commercials are buying, you should expect the market to go down, and especially when they're trending. They were already negative, so that was already sort of we think that the US dollar is in a bull, but we're unwinding that position because we just don't know what the trend is. That old trend that got us uber bearish, and of course, you see what happened. Boom, big move up. That's played itself out. So now, and you could make the argument, what's the natural thing for the market to do? at any given point in time is a 50% retracement. So strongly trending market state, strongly trending information from the COT report. That hit an apex, an extreme. And what we really should have done is come back to the 50% line and just simply oscillate around WD GAN's 50% level as the market figures out, okay, what's the next trend? So we look at the commitment to traders reports, and on this dump here, notice little bit of a divergence here. So notice price was heading higher here, and notice the W came in here on the large specs. M came in here on the commercials. Of course, we always want to listen to the commercials. They're the smart money. Large specs, they will be right, but they'll be opposite, and they're just facilitating trade for those commercials. So commercials were heavily short, which is bull market. They reduced their positions to neutral on the 50% retracement. We want to figure out what the hell we think the market's going to do. Then they've instantly gone in and put in a new M and started aggressively selling again. So based on what I just said there, if the commercials have just put in an M and they're aggressively selling, then we should be expecting that the market should go, after what I just said, if I was a half decent teacher, all of you should answer in unison. Well, if the commercials are bearish, then we should expect price to go up. Thank you, Nick. So remember the large specs, the institutional players, they have no choice. They have to be, they're facilitating the trade for the commercials. So they have to be on the right side of the market, which means that they have to make money because usually they will be positioned correctly because these guys are hedging. They don't give a shit about whether they make or lose money on the trade. They're hedged. They want to be neutral. The textbook definition is they want to replace price risk with what's called basis risk, but we won't get into that. So the point here is, were the large specs positioned correctly to take advantage of an up market? So they went heavily long here, and they're actually a bit underwater right now, aren't they? So that's interesting. And it's interesting too how the large specs actually have gone and made new highs here. So they're continuing to add to their longs, but interesting how the commercials are not adding to their shorts. So I guess what I would say right here is this market is out of phase. The large specs are actually getting punished here right now because they're like net long from this level right here. And you can see price isn't hugely different. So the level at which the large specs went like uber long again here was this date right there, right? So you can see commercials start going short. That means they're expecting the market to go up. Large institutions go long, facilitating the trade for the commercials. That's that bar right there. And so for 1, 2, 3, 4, 5 weeks, they were looking pretty smart. Then something happened. Keep in mind, this is a weekly price chart. Something happened 1, 2, 3, 4, 5 weeks ago that actually is completely opposite to how these guys are positioned here. And I might even argue that the large specs are actually now underwater relative to where they started to go long in earnest, and they're still long, and they're even adding to their longs. So I might make the argument, and this would make sense, that the whole world seems to have absolutely convinced itself that the US dollar has topped, i.e., risk has come back on into the marketplace. I mean, what has the stock market done since that October 31st pivot. And remember, this was through that whole eclipse window, right? Because remember, the eclipse started on Friday the 13th, like right in there. And we kind of went kind of wonky. And then since the end of the eclipse, the stock market has gone just straight up, right? If we look at the stock market, I don't know whether I have it on here or not. I guess it was over here. That's crude. That's gold. So it might be interesting to look at the commitments of traders report for this. Does that look like it's a sustainable move? Remember I said this the other day, or not the other day, about an hour or so ago. I mean, something doesn't look right about this. I mean, how on earth can the Fed lower interest rates if the stock market's up at new all-time highs? That you heard Powell say, don't expect us to lower interest rates anytime soon. That ain't going to happen. So who's wrong here and who's right? And then remember, we also are coming into this irrational exuberance window here. So I might argue, looking at this commitments of traders report, that even the traders themselves have been a little bit caught off guard because of this. That's fascinating. Interesting too, there is that 50% rule sort of oscillating around the midpoint of this entire move. You're asking me to comment about what I see out of the commitments of traders reports. I don't think that this US dollar is a bear until you actually see this commitments of traders report. The large specs go and break this bottom, and this turns into a massive M top, right? Up, down, up, fail. And then conversely, the commercials, this will turn into a massive W. And if the commercials are going long, then that means that the market's going down. So it looks to me like the commercials were right somewhat through here. And of course, the large specs, they have no choice but to make money through that. US dollar going down. It looks like through here, there was a sentiment shift. And the large specs actually think that the US dollar is going to start going up. Commercials were starting to think that the US dollar was going to go up. It did go up. Maybe this is just nothing more than just a healthy correction of this big up move. But if I'm to believe this data, then what I really have to expect is, because this is a new M and that's a new W, what I really need to expect is that the trend has been established, that we're heading lower out of the commercials, which means that we should expect higher out of the US dollar. And if that's the case, then that actually lends support to the idea that this actually needs to tick back up. The inflation problem is not over, even though politicians are claiming that it is. And if this inflation problem does tick up here, then that means that the Fed probably can't lower interest rates. We've talked about the housing market. Even though the Fed's trying to reduce its balance sheet and it's trying to reduce the M2 money supply, it's not stopping this major inflationary component in our society. And I saw the other day, and I was sharing it with the community, that the rental CPI is running at about 7.8, 7.9% right now. So rents are still hyperinflationary. I don't see how the Fed can lower interest rates in the face of that. So I actually think that somebody's wrong here. And I hate to say it, but I think that the stock market people are wrong. I think that from a corporate perspective, companies' prospects look relatively good. But if you were actually going to measure what the Fed is going to do with regard to short-term interest rates and how that affects the currency, I think that this is telling you that they still expect the US short-term interest rate to outpace everybody else in the world. And frankly speaking, I like that thinking. I don't know whether our report shows it here or not, but for instance, Canada, we're actually, the economy is actually contracting, whereas the United States economy is booming. Old man Biden did get that comment right. The US GDP numbers came in at a staggering 5.2%. I mean, that's a ridiculously strong economy. It shouldn't be anywhere near that. Healthy economy grows at like 2 to 3%. And you hear, Fed, I want inflation at 2%, blah, blah, blah. So economy growing at 5.2%, this is way too strong. But notice, look at a country like Canada. Canada's actually shrinking. So you can make the argument that Canada is full on in recession. We've had like multiple quarters here of negative GDP growth, and it's only accelerating. But I've told you repeatedly, I mean, who can finish the sentence? Canada is a what? I've told you guys this repeatedly for like literally 5 years now. And, the stupid housing market, it going absolutely bananas here. It's not helping this country at all. And the stupid politicians that are in control of this country, their solution to this whole problem is just let anybody into the country. Open up the floodgates. We don't care who it is. They're lending money and credit to all these people coming in. But, if the economy is contracting, what are these people going to do for incomes? Have you ever been to Canada in the middle of a commodity bear market? This country's a shit show. Hey, go and open up your history books and look at what Canada did through the 1990s. It was a disaster. Hell, I mean, there's a referendum came within 1% of the entire country just breaking apart. And I can tell you, those people in Quebec, they don't really want to be in this country. I've said this repeatedly. So anyway, the point of the matter here is what I think happens is that the US economy stays fairly strong. There's no way that they're going to lower interest rates in the face of that kind of data with the housing industry as strong as it is. And the GDP numbers coming in staggeringly hot. Keep in mind, it's perfectly fine to lower interest rates in the face of weak data. So you can see Canadian GDP, and this is just quarter over quarter, but year over year, I think it was like down like 1.5% or something. I could easily see that Canada actually lowers interest rates dramatically because it's an absolute shit show here, although I don't think so, because the inflation problem here in Canada is just as bad as the States. So Canada is caught between a rock and a hard place. Canada is in a very, very bad position. But the United States, with this kind of GDP data, this kind of numbers, the United States is laughing here. And comparison-wise, I actually like the thinking that on balance, you should be long the US dollar, not short here, because relatively speaking, I mean, you see what's going on in Europe. Do you think Europe is actually going to have higher interest rates and more growth than the States? I mean, did you see that German data? Look at this German consumer confidence, minus 27.8 and getting worse, not getting better. How on earth can you expect Germany to outperform and need to raise interest rates dramatically, which of course drives money flows? And I think that the institutional players all said, well, the United States economy is the only economy in the world that's working. I mean, are you seriously going to tell me that you think China and all that shit? I mean, they've got another fucking COVID thing happening there now. I mean, it's an absolute disaster. And their one major trading partner, the big tunnel between fucking Russia and China, the Ukrainians just went and blew it up. Hey, congratulations. That was a fucking cool thing to see happen, in my opinion. I thought that was fucking awesome. Way to go, Ukraine. Just stick it to Vladdy up the ass. So you can't make the argument that China is going to grow faster than the Americans. You can't make the argument that even Canada is going to grow faster than the Americans. You can't make the argument that the Europeans are going to grow faster than the Americans. So if I was sitting there somewhere in the world and I wanted to put my money to work, frankly speaking, I would agree with these guys. I like this thinking, and I actually agree with what the commercials are doing here. They're positioning themselves for a stronger US dollar. So you asked my opinion, what I see out of the data. I hope that helps you understand what I see. All right. Interesting. That's right exactly at 1:01. So time for me to head off to my real job. Slow and steady wins the race. PMA for the win. Don't take no wooden nickels. Remember what your number one job is? Under normal circumstances, I would say go buy Bitcoin as a hedge, but I can't tell you to go buy Bitcoin there. I mean, it's just ridiculous. I can't tell you, our in-house analyst, Sjord, I mean, he's just absolutely smart as a whip. And his fundamental analysis is absolutely spot on. And he's got his winners for the coming cycle. But I can't tell you to go and buy a route here. I just can't do it. I'm sorry. I know you want me to. I can't say go buy Rune here. What I have to say is if you didn't participate in this bull market, then your job is you have to just keep adjusting your reload zones, and you have to be patient and disciplined and wait for the pullbacks. And I know that sucks. It might mean you're sitting here doing nothing for the next few months while all the kids in crypto are all, ooh, look at me, I'm so fucking cool. What I would say is hopefully you did buy when you were supposed to buy, and you're in the position of banging out doubles now and triples and quadruples. Look at this little one that I've got on the books. I don't know whether, here's a really good example where, not really the best time purchase. I totally missed the ad trade. I mean, I should be long from here, which means that my average should be somewhere in this area, but shit happens. I missed the trade. But even now, I mean, am I going to go and buy that there? No fucking way. But am I going to be selling halves on doubles if this thing gets above 8-9 cents? Absolutely. And I mean, you tell me, is that even a realistic possibility in this crazy world? Where the hell's the damn top on this thing? There it is over there. And now we're here. Is it realistic for this thing to trade up into this area? Absolutely. So that's the kind of thing that I'm doing right now. And, same thing with all of these different names that were given to me on the site by site members. I mean, we have such a fantastic community. Really, really smart people in the space. And, this is a name that a site member gave to me recently. I don't see any reason why I can't trade up to $1 here, but can I justify telling you in the public, oh, just go and buy that and you'll do fine? No, I can't. And interestingly enough, you can see where reload zones are. You can see where I bought. I actually bought kind of late. I think I told you earlier. Ironically enough, where I would ideally like to be long is actually where I would expect this thing to pull back to if there is some sort of correction in this space. So there's your market for you. So anyway, slow and steady wins a race. Don't take no wooden nickels. Remember what your number one job is. Pop on the site in our little old ladies room. We're constantly posting names that are putting in new W's. In fact, actually, there was a guy. I'll finish off with just a treat for you. There was somebody who said, Brian, I just came to the site, and I know, kind of missing, and I'm not quite sure how to do this, but can you at least sort of give me a couple names that maybe I could paper trade while I'm waiting for the bull market, the next one? And I gave him a few names, names. This one's kind of interesting. So maybe take a look at this one. This is DREP. You can see how it's still sitting right at its W level. And this kind of looks like an Adam and an Eve. So that one's buyable. And it's interesting how when they're down here at the bottom, remember I was barking when Litecoin looked like this a year and a half ago. I guess yeah, about a year ago. And I couldn't get anybody to buy Litecoin when it looked like this last year. Well, I mean, what does Litecoin look like now? And I got to get out of here, don't I? I was supposed to stop talking 5 minutes ago. So, there was the bottom last year. Yeah, right through there. So that's kind of similar to what this thing is. So maybe do your due diligence. Are you interested in this name? If you've never done this before, call it a paper trade. Boom, you just bought it 26 cents. Merry Christmas. And just see what happens. Point of the matter here is that if I did want to put new money to work, I have to go and find names that look like this. I can't. I just can't. And I can't, in good conscience, tell you people that, hey, it's all right. Just go and buy something like this. Technical analysis doesn't matter, even though Willie's actually approaching getting stupid and there's kind of a volume div here on these pushes to new highs. I can't do that. I can't do that. You know who I am. So what I would just simply say is if you are interested, you've got to go and hunt for ideas that are putting in W's that look like this. And if you do find them, pop on the site, post on the site. And hell, I might just go buy some with you. So, all right, gotta hop. Have yourselves a great day. Wish me luck on the road with Lily. Slow and steady wins the race. And we'll see everybody in the market first thing tomorrow morning. All right. Have yourselves a great day. All the best. And bye for now.